Hi, I'm Shelby Burnett,
And I'm Kara Baldwin,
and we're in Section 1 of SBTE 440.
and today we will be discussing the feasibility of bringing Topgolf to Columbia, South Carolina.
In this discussion, we'll do an overview of the Columbia metropolitan area, we'll do an in-depth data about the venue and project development, and we'll also discuss key assumptions that are involved in our project.
Finally, we will go over the first 5 years of potential financial statements.
It is important to assess the market in Columbia by evaluating demographics of the city. By analyzing this data, we are able to answer the question of interest, or if Topgolf will be a viable venue among this demographic. The map on the left is the MSA map of Columbia. Columbia has a population of 130,000. It is located in Richland County and serves as the South Carolina state capital. There are 3 different interstates that cross over Columbia: Interstate 20, 26, and 77. This is important for our case study because there will be more foot traffic and tourists passing through the city. As for economics, the bottom right graph shows the household income in Columbia. The average income is $54,000. This suggests that the area is primarily populated by working, middle, and upper class families. When looking at race and ethnicity, the largest groups are white at 56.2%, African American at 33.7%, and 5.8% Hispanic or Latino. Gender plays a major factor in golf. 51% of people in Columbia are female, while the other 49% are male. It is useful to know that while there are only 24% golfers that are female, the female golf rate has grown 13% over the past 5 years and is expected to continue. The median age for Columbia is 36. Columbia has a fairly young population with the most populated age range of 20 to 29 years old. The breakdown of the chart on the top right indicates that Columbia contains a lot of families. In terms of psychographics, families tend to center their interests and activities around children. Since families tend to have an active lifestyle, sport-related events are more appealing to them. Looking at college students and young adults, these psychographics enjoy active social lifestyles. They tend to value experiences over materials. When we compare the demographics of Columbia to the demographics of Topgolf, we can see many overlapping similarities. This information allows us to infer that there will be interest of a Topgolf facility in Columbia from the population. Now that we have a good market base, let's discuss the company operations of Topgolf.
Topgolf is a growing sport and entertainment company with 52 locations worldwide, including the United States, the United Kingdom, and Australia. It comes with an array of amenities, including Topgolf technology, full food and beverage services, live music, along with arcades and video games. Currently, there are 4 main investors for Topgolf, including West River Group, who owns and licenses Topgolf in the United States, Callaway, Dundon, and Providence Equity.
Topgolf Columbia will be built on the 6-acre lot that currently houses Capital City Stadium. The land will be cleared by the local government at no cost to Topgolf Columbia, but we will purchase the property from the government at the tax-assessed value. 2 acres of this lot will be used to build a 300-space parking lot to serve our patrons. 72 total golf bays will be distributed between 2 levels of Topgolf Columbia. The facility will be an estimated 72,000 square feet, the average size of a Topgolf facility. We estimate that the cost of the building will be $18 million, which is the average cost of constructing a Topgolf facility. We've chosen these average numbers selected on our modest construction layout and our smaller market size. 600 people can be accommodated by Topgolf Columbia between our 72 bays and our social spaces surrounding the bars and retail areas. Although only 6 people can play at a time, 8 people can be housed in each bay at any time. We will have 300 people on staff who will make an average of $12 per hour at 2,087 hours worked per year, which is based on the estimate for a full-time employee. These people will work in guest services, food and beverage services, as waitstaff, and in retail services. This number is based on Nashville's Topgolf facility, which has 500 employees, but is substantially larger than the Columbia operation.
Now, let's take a look at the projected financial statements for the first 5 years of operations for Topgolf Columbia. We will start with the balance sheet. For accounts receivable, we have estimated this value to be 5% of total revenues. For retail inventory, which includes everything in our pro shop, we have estimated this number to be 5% of total sales and to increase by 5% each year. For golf equipment, which includes the clubs and balls for our patrons, we have estimated these numbers based on the cost of clubs and balls on Amazon. We want to have 500 golf clubs and 50,000 golf balls. And this comes from an estimate of $156 for 10 clubs and $36 for 12 balls. We also want our golf equipment to increase by 5% each year, and it will be depreciated straight line over 5 years as an asset. For our building, it will be $18 million initial investment, which we have discussed before as the average cost of building a Topgolf facility. This will be depreciated straight line over 20 years. The cost of our land comes from the Richland County assessed valuation of the property. For our course equipment, this includes everything that will be used to actually manage the grounds of the golf range and the equipment used to pick up balls and things of that nature. It's based on the average cost for general grounds equipment for golf courses. This value will be depreciated straight line over 5 years, and we want our course equipment to increase by 5% each year. Entertainment technology includes our TVs that are displayed throughout the facilities for the enjoyment of our patrons. The value is based on 200 TVs at $500 each, depreciated straight line over 5 years. We also assume that we will purchase 2 new TVs each year. Finally, accounts payable is calculated by 5% of total expenses, not including the expense of depreciation. Accumulated depreciation on the building, golf equipment, course equipment, entertainment technology will be discussed when we go over the depreciation schedule later in the presentation. The short-term debt and long-term debt account balances come from the initial $16.5 million borrowed from a private bank at the start of operations. These accounts will be discussed more in depth when we go over the loan or amortization schedule. The paid-in capital account is the $2.7 million initially invested by the 4 main investors of Topgolf. Finally, the retained earnings accounts comes from net income, which we will discuss next when we go over the income statement. Although we've already named our main sources of revenues, we will now discuss how they are calculated and projected for the first 5 years of operations. Membership revenues, which falls under golf operations, comes from the fee that people have to pay when they play their first game of Topgolf at any facility. This is a $5 membership fee that comes with a card. We have projected that 51% of the 387,000 annual visitors at each Topgolf facility will be a new member, based on the projection that 51% of Topgolf visitors have never played golf before. Bay rental revenue is the other source of golf operations revenue. Although the rental fees for a bay differ by time of day, with the premium being placed on night and evening games, we have estimated an average $35 for a rental fee for a 6-person bay, with each of the 387,000 annual visitors renting once each year. Our sponsorship revenues are based on our 4 tiers of sponsorships. The lowest level is the bay level, which is $1,000. The next level is the bronze level, which costs $2,500. The next level is the silver level, which costs $5,000. And the top level is the gold level, which costs $10,000. Our sponsorship revenues are calculated based on the projection that we will have 5 bay level sponsors, 3 bronze level sponsors, 2 silver level sponsors, and 1 gold level sponsor. Food and beverage sales are calculated using the statistic that 50% of the $24 million in total revenue made by the average Topgolf facility comes from food and beverage sales. Our retail sales were calculated by estimating 2/3 of food and beverage revenues, and this includes anything that was sold in the pro shop once again. hospitality and special event revenue is kind of complicated. We have estimated that we will have one large event per month, which is priced based on the number of people in attendance, and two small events per month, which has an average package price of $530. Our large event we have estimated will have 30 people in attendance at an average price of $44 per person. Finally, our food and beverage cost of goods sold is 40% of total sales, as well as our retail cost of goods sold is 40% of our retail sales. Our main sources of expenses will be salaries, utilities, maintenance and upkeep, administrative expenses, insurance expenses. Our salaries are calculated based on our 300 employees at an average of $12 per hour at 2,087 hours worked per year per employee. This is based on a full-time schedule for each of the 300 employees. Our utilities are based on 70 cents per square foot for the 65,000 square foot facility. Maintenance and upkeep is based on 30% of gross profits, and administrative expenses are based on 16% of gross profits. Finally, our insurance expenses are expected to be $25,000. Revenues and expenses will increase at the 2% inflation rate as previously discussed from year to year. The depreciation schedule shows accumulated depreciation through years 1 through 5, but it also shows how much of our assets depreciate during each year. This amount does not remain constant from year to year because our amount of assets will change over time. Our long-term assets, which are just the buildings, will be depreciated over 20 years straight line. Our short-term assets, which are course equipment, entertainment technology, and golf equipment, will be depreciated over 5 years straight line. This loan is taken out at a 5.5 interest rate over a period of 30 years with one payment per year. Our statement of cash flows comes from information included on the income statement and the balance sheet. It discusses how cash will flow in and out of the company throughout the years. Thankfully, we will have a positive cash balance, meaning a positive overall cash flow, for our first 5 years of operations.
Based on our market analysis, key assumptions, and forecasting of financial data, we believe that Topgolf will be a successful business venture in Columbia, South Carolina.
Thank you for listening to our presentation, and we hope you're as excited as we are about Topgolf coming to Columbia, South Carolina. Hi, I'm Shel.
We put bloopers at the end of
Hey guys, it's Karen. I'm back with another video for you guys.
with guest star.
Me. Okay, see you in my next video. I post every Mondays, Wednesdays, and Thursdays. To go over key assumptions, we brought in a guest speaker, Miss Cassandra Prescott, who is not only a member of Topgolf, but a professional golf player who played in the most recent major, the Masters.
Hello, everyone. As you can see, Topgolf would be very successful in Columbia, South Carolina, and I know that because I have been to Topgolf and I golf.
Thank you, Cassie.